Well, with fewer homes on the market, we know that prices are getting pushed to record highs and bidding wars are rampant in cities across the country. So what's next for the housing market as the economy continues to recover from the pandemic? Joining me now is Brett Ryan. He is senior U.S. economist at Deutsche Bank. Brett, thanks for being with us. So if you just look at the information out today from the Commerce Department, sales of new single-family homes in March up 20%. There's been talk about the market overheating. Is the housing market already overheated?
Great. Thanks for having me on today. Certainly part of the rebound that we've seen is related to weather with the new home sales, particularly today. February activity was impacted by weather. But more broadly speaking, you had a delay of activity from last year that was what you're seeing now is pent-up demand, that was stalled when the pandemic hit and people were in lockdown. So to some extent, the sharp rise in prices and sharp rise in transactions, reflects that pent-up demand, and things should moderate. But that said, there are still several fundamental positives. You have one, high pent-up savings. Two, you have credit easing for mortgages. And three, the Biden administration looks to make a $213 billion investment in housing, in affordable housing over the next several years. So there are a lot of fundamentals that I think result in it's going to be outperforming the broader economy, continue to outperform the broader economy. I wouldn't say it's necessarily a bubble. If you look at where transactions are happening, a significant portion are at the higher end of the housing spectrum. So it's not like all of housing is moving higher. It's a specific part of the housing stock.
And certainly mortgage rates play a part. They always do. Do you anticipate these at near historically low rates to continue and to continue to buttress the housing market this year?
Right. So mortgage rates definitely have been a factor keeping affordability, pretty even though prices have shot up. And that's been the offsetting factor in terms of housing affordability. It's been rates. But yes, rates are going to continue to rise, with 10-year rate expected to be over 2% by the end of this year. That's probably going to add another, close to a percentage point, not a full percentage point, to mortgage rates. And that's another thing that's going to, pump the brake a little bit, if you will, on the housing market. And that's going to happen just as, the pent-up demand is beginning to fade. The other thing to mention, though, we've been underbuilding for the past decade. So, to that extent, it's important that we have more home builders out there, and they should continue to do well. But at the same time, costs are rising for them, so it's going to pressure building margins.
Yeah, inventory has been a problem for a while now. When you think about what could be a headwind for the housing market, how we might be maybe pumping the brakes a little bit, could it be higher taxes? We know that, we saw what the market did yesterday when it was just a proposal came out from President Biden saying that he wants to possibly double the capital gains tax on the wealthy. What kind of impact might that have on the housing market, especially if you're saying we're seeing a lot of the activity happening at the higher end of the market?
Right. So with respect to the capital gains tax, it would be on long-term gains. So, your short-term gains are already taxed at the income level. And two, this is on people with, over $1 million in income. From what we know about the proposal, it's for those that are over $1 million in income. That's about 600,000 households in the U.S. Now, that segment also owns about 50% of the corporate equities. So, to the extent that it's a macro issue, I doubt that it's going to spur a wave of selling. But with respect to housing, I don't think it's going to, put that much of a dent, in housing. I think what's more important for housing is what happens with the SALT deduction going forward. And that remains unclear at this point. We know that Schumer and Pelosi have been pushing for it, but the Biden administration has indicated that they are willing to negotiate on this in terms of raising the caps. But I think, as you point out, I think the tax taxes, especially with respect to the SALT tax, would be more of a driver for housing.
And finally, what role do you think housing is going to play in this economic recovery? We've seen it be a pillar of the economy throughout the pandemic, but what about, on the other side of the pandemic? Or could it, if it starts to wind down or slow down, could it actually be an impediment to the recovery?
Yeah, the housing market isn't as large of a portion of the economy, and the economy is not nearly as levered to housing as it once was, especially with regard to the banking system. So I don't think it really reflects poses a major risk. You don't have nearly the amount of speculation. You're seeing speculation go on for sure, but you don't have nearly the amount of risk in the system in terms of subprime mortgages. In fact, you're the only people that are getting mortgages these days are those with 700 plus FICO scores. So credit's only being extended to the most pristine borrowers. In terms of the labor market, in the last recession, about a quarter of the jobs lost were in construction. This time around, we're at a dearth of construction jobs, and there's great demand for construction jobs. And so we need more. We need a greater supply of construction workers at the moment. So yeah, I don't think it's going to be a major risk, even if there's a mild slowdown.
Yeah, much different story than we saw during the Great Recession for sure. Brett Ryan, senior U.S. economist at Deutsche Bank. Thanks for being with us today.